Hello, this is Steve Malone with CompuseFX. Hope you're doing well today and you get some good trades. Tomorrow we have the non-farm payroll report, the largest watched, most anticipated, heaviest traded report for the month of all the U.S. reports. Why? It's employment. Employment factors into just about every U.S. report, from the GDP to Consumer Price Index to Producer Price Index and others. So everyone is watching the employment of the U.S. If employment's up, that shows some stability in the U.S. market. Now currently expectations are for about 180,000. The range is from 145 to about 230, 235. Now when I trade the non-farm payroll, I'm not a news trader. Tried that, didn't really work too well for me. So what I have a tendency to do is just to let the market settle itself down and then find the trend and trade off of that. A couple of things I monitor when I trade the non-farm payroll is I watch the movement of the dollar-yen. Of all the currency pairs out there, I think it's best to watch the dollar-yen because of the interest rate scenario between the dollar and the yen. They're both used as carry trades, and they're both very close as far as interest in each one of them. The yen paying about 0.1%, at best the dollar paying 0.25%. If we get beyond the 235 area, then I look for buying of the dollar and seeing selling of other currencies. At the same time, if it's less than favorable, like down around 145 or less, then I'm looking to sell the dollar and buy into other currencies, and we may actually see the dollar yen drop. Now typically right before non-farm payroll, the market goes consolidated, just kind of in a tight little range. Don't see a whole lot of action up until that report comes out. And then at that point, one of the things that I do is I mark levels that the market's already shown itself. One thing I've learned in my number of years of trading the Forex market is that price has a tendency to go back to where it's been before. Part of that happens to do with institutional trading of just monitoring highs and lows that the market does, because those highs and lows dictate supply and demand in the marketplace. When the market gets so high, no one wants that particular currency anymore, then there's a great amount of supply people want out of it. At the same time, if the price drops so far down, then that's a better place to buy in at, and there's a greater demand for it, and we get a rise back up in the currency. So let me just show you kind of what I do here. When we take a look at the yen, you can see that we've had this nice little upward move, but we're getting some consolidation for the day here. Now what I like to do is I'll go out to either an hourly chart or a 4-hour chart. Let me go on to the 4-hour chart. I've already got some levels that I've put on the chart. So one of the things I like to do is I like to mark average highs and average lows. So here's an average high, and then here's another average high, and if I step out just a bit more, I've got another low level right here, an average low that is this high back over here. So if I consider average high matched to an average low here, here's another average high, some average lows here, and average highs. So I'm looking for, if the market drops, if we get this push down, if the report comes out worse than expected and the dollar yen drops, then I'm going to be looking for levels that the market could potentially get to. Now I'm not saying that right at the very moment of the report it's going to run to that level. I'm going to watch the up and down movement, and I'm going to attempt to see where the market's going to. So let's say the report comes out worse than expected. We're sitting up here around the 100 mark. If it comes out worse than expected and it makes a push down, let's say to 99.50, and then breaks 99.50, I'm just looking at the possibility that it will sink back down and retest this old resistance. Remember, old resistance becomes new support. If it breaks that, then we're going to see it possibly sink down. As a matter of fact, the dollar yen, there are a lot of bids still sitting in the marketplace between 98.50 and 99 level. So there's a possibility. Now if I step out a little bit further in time, you're going to see that I marked some highs. Looking back in time, you can see that the market is pushed up, and these highs come in on an average about the 145 level. The next highs I see here on average come in about 185. The next set comes in about 101.25. So if the market were to make a push up and I don't get a bounce off the 145, let's say I don't get that bounce, but I get a breakthrough, then I have a target already in mind as where it's going. Now, in the event that the market kind of gyrates up and down, let's say it comes out right at expectations, 180,000, and it kind of gyrates up and down, but there's a favorable tone in the market, or the dollar index continues to rise, then I have a target in mind already, because price will go back most likely to where it's been before. So looking at the dollar yen, there is a favorable bid tone right now in the dollar yen. That means a bullish bias to the upside. Now if we take a look at the pound dollar, I've done the exact same thing on the hourly chart. Let me step out just a bit here so you can see this, but I've marked also some average highs. And a high up here, average high there, average highs coming across here. So right now we're consolidated right around 55.85. I see there possibly a test at 56. We could probably break right through 56. If we do that, I'm going to be looking for the market to go to 56.25. We break that, 56.45. Then we're going to come up here and we're going to test that 56.60, 56.65 level. If the report comes out better than expected, I'm going to look for it to fall. Now it might gyrate here, or it might make an immediate move down, but I've already got in mind the levels as to where it's going. Okay? So if I see a trending move after the report, like 5-10 minutes after the report, I start seeing a trending move, and I jump on that trending move, I already have in mind as to where it could potentially go. Let's take a look at the euro dollar. I went out to a 4-hour chart on the euro dollar, and really from a big daily perspective, 131 is a midpoint of the daily range. Let me step out and I'll show you on the daily chart. You can see that here's the daily, a lot of up and down going on, then 131 comes right in the middle. So what I did was I went to my 4-hour and 1-hour charts, and I simply drew out average highs and average lows as where I expect the market to go. So here they are. If it comes out better than expected and we see continuation down in the euro dollar, the market may make an immediate move right back to 30.60. If it does that and breaks, then I'll be looking to continue or short from that level down to the next level. If on the other hand it comes down and hits this level and sits there, can't seem to go any further and shows potential on a bounce, I'm going to be ready to bounce back to the upside. So in this case, here's a average low in this area, another average low with this mix with this average high right here makes a level. See these average lows, high scenario, another average low makes that level. Again, highs, low, a level. Now on the other hand, report comes out worse than expected, then I'm going to look for the euro to potentially turn back around and then start taking out these levels on the way up. Well folks, this is Dean Malone with Compass FX. Hope some of the information I've shared with you about trading the non-farm payroll, again, look at your chart, taking that bird's eye view on a 1-hour, 4-hour, mark those previous highs, previous lows, where supply and demand will be at, look for the market to move to those levels and either break through or bounce. If it breaks through, look for the continuation to the next level. If it bounces, look for the push back to a previous level or to back to where it started from or some retracement thereof. Well, this is Dean Malone with Compass FX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.